And a very warm welcome. You're joining us here at Hyde Park on Other Derana 24 once again this week. And tonight we will discuss Sri Lanka's tax policy, how taxes will shape our incomes, our revenue and our expenditure going forward, our living standards, the cost of living and how the economy operates. Whether these taxes will be conducive for businesses to run, whether these taxes will help individuals have a good quality lifestyle day to day, and whether revenues will be tapped in such a way that the masses will be able to have basic necessities in their best. We've invited to our studios expert in taxes, tax policy, and attorney at Law Suresh Perera, who is joining us tonight to discuss all this. A very warm welcome to you. Good to have you back on the show.
Thank you for inviting me.
Congratulations, Suresh. You've been selected the International Tax Review's Tax Practice Leader of the Year for 2024 in the Asia Pacific region. What does this mean? Does this mean you know the subject well, or does this mean you've? It's really amazing to hear that we've been talking about how in Sri Lanka tax is being evaded, how we don't have a tax policy, and how we need the international to tell us how to prepare our policy. But here you are, a tax leader. What does this mean?
Okay, International Tax Review actually is an organization that is ranking tax firms and the tax consultants in the globe. So regionally, they select every year who is the best, what is the best tax firm, what is the best transfer pricing tax firm, etc., and who is the best tax consultant, that kind of awards they give. So talking specifically about this one, I have been fortunate that they have selected me as the tax practice leader for this year in the entire Asia Pacific region.
Congratulations once again in order. We're here to discuss about Sri Lanka's tax policy. This has been under review for some time. Of course, after the crisis, there have been more interest, even among the common man, about taxes, how much we pay in taxes, how much we get in return for what we pay to the government as taxes. With the new government, with President Anura Dissanayake taking office and NPP policies taking shape in government, especially with the NPP proposing that Sri Lanka's income tax free threshold be increased to 2.4 million rupees a year from the current 1.2 million to equitably amend tax rates and tax brackets, and proposes offsetting the revenue lost from abolishing value-added tax estimated at 300 billion rupees by increasing taxes on the wealthy, and also offsetting special incentive tax for investors in sports and local sports equipment manufacturers. And there goes on the policy proposals by the NPP, especially education, health and food. I'd like to speak about all this, but just recently, former President Ranil Wickremesinghe in a statement stated that Sri Lanka will have to see a revenue growth of 1% annually if we are to meet the 2027 tax or revenue obligations as we've entered into agreement with the International Monetary Fund. Are we doing this right? Are we on the right path, or are we really going to fall into further abyss?
Okay, that's a lot of questions. Let me put it this way. Sri Lanka has tax policies. At the same time, these tax policies keep changing. That's why we hear that there is no certainty with regard to the taxation, tax policies in Sri Lanka. It's a common grievance that we hear. So there is actually a root cause for this, because from my angle, I don't see proper ecosystem in Sri Lanka with regard to creation of tax policies. What I mean by that is, at the finance ministry, there should be a policy unit. In fact, IMF in their literature also has advocated that every country should have a tax policy unit that look into the taxes. In Sri Lanka, we don't have that environment. So obviously, there are contradictory tax policies that keep coming from time to time. So that is what is happening. So earlier, because, prior to 2019, we had, a tax policy, let me put it this way. And then when the former president came, he drastically changed the taxes. In other words, he reduced the taxes, both direct and indirect. And that's one of the elements that resulted in the Sri Lankan economy coming into this situation. And thereafter came after Aragalaya, again there was a change of the government, and then we again saw another set of proposals being introduced to ensure there will be more taxes to be collected. And thereafter again now we see another phase of the government with the current president coming into power, where he's coming up with another set of proposals, or rather, I think those proposals are being still formulated, but he has indicated certain areas where he would like to give relief. Right, so this is where we are. So now, again, I will conclude my answer to that one. What we need is more than the focus on the tax policies, a tax policy making unit so that we get robust, tested policies and not some ad hoc policies that keep coming and going. That doesn't take...
You mentioned this during our last discussion.
Yes, I have been telling
this. The tax policy unit, we didn't get to talk about it much, but do you think there's government and government setting, what will be the really accountability, and how will that work? Okay,
I'll give you an idea with regard to this. This is not my creation. This is basically in the, if anyone visiting the IMF website can see that this document is there where they advocate this thing called the tax policy unit. So roughly it's something like this. There is a unit that is accountable, reporting to the finance minister of the country, who will advise the finance minister with regard to the tax policies to be implemented in Sri Lanka. Basically, they overlook the tax governance in Sri Lanka. So this policy will again have several tax sub-policies. Say one subcommittee focusing on direct taxes, another committee looking at indirect taxes like the VAT, etc. And then international tax to be focused by another sub-unit. And of course, very importantly, a unit focusing on cost-benefit analysis of the taxes to be introduced, taxes to be exempted, etc. Because taxes, any change to any of the taxes, whether introducing taxes, increasing taxes, exempting from taxes, has a cost and the benefit. So that cost-benefit analysis should be carried out prior to implementation. In Sri Lanka, we don't do that cost-benefit analysis. We straight away go and implement, and then we see the results thereafter. So what is that? This is what I call trial and error policy of tax policy making in Sri Lanka. We need to come out of that one. Then only we can have a long-term policy. So now that is what we need to have in Sri Lanka. First, get the infrastructure correct, right? So if you want me to touch on the policy changes that we have witnessed during the last few years.
Right. It will be interesting. It will be good to really recap on that.
Yeah. So basically, before 2019, we had a somewhat stable policy, and then, as I mentioned, there was a crash in 2019, and then as a rectification of that loss of revenue, another set of policies introduced. For instance, if I give you examples, the corporate tax rates, earlier we had multiple corporate tax rates. So for preferred industries, there were concessionary rates like 14% for tourism, etc. For SMEs, 14%. And then all these were basically increased to one rate, 30%. So now in Sri Lanka, we have a uniform tax rate of 30%. So
regardless of your income status,
regardless of your nature of the business. Right? Okay. So whether you are a standard company or a small company, whether you are in the tourism business, whether you are in the manufacturing business, all pay tax at the rate of 30%. So it was done hurriedly at that time because we were in a deep financial crisis. In order to collect taxes fast, they adopted this uniform tax rate. But actually, my personal view is that policy is not correct. We need to have multiple income tax rates in order to identify the industry areas that we should promote, to discourage the industry areas that we should discourage. Right? So that is a tax concept where you use tax rate as a tool to encourage and discourage certain industries.
Has this been successfully implemented elsewhere in any country that we can draw comparison from?
Correct. So that is why everywhere that is what we find here.
Okay.
Sri Lanka also up to 2000, this new policy, this was there. For instance, basically you take the sin industries, tobacco, alcohol, etc. at a higher rate. And standard tax rate used to be at 28%. As I mentioned, 14% was applicable on, say, small and medium enterprises, preferred industries like the education, tourism, etc. at the lower rate. So that is no more. So at that time, okay, because of the crisis that we were in, and there was no time to probably analyze properly, and we created a uniform structure, uniform rate structure. I think now it's time to move out from that and identify the areas that we need to promote and give them certain concessions.
Right.
At the same time, look at maybe certain industries where we can afford to increase the tax rate more.
Let's say we took those short-term measures in the height of the crisis, but what damage has such tax policy done to Sri Lanka? And you say give concessions to certain industries. What are these industries as you identify?
I would say main one is the SMEs, small and medium scale enterprises, because Sri Lanka's corporate taxes, I would say the business taxes actually come from not these big multinational companies. Core is basically the SME base. So we need to promote the SME base. We can't afford to kill them. Now here what happened was from 14% tax rate, it went up to 30%. So it's more than the double. And so because of that, we find most of the SMEs struggling. So I think it is the right thing to look at them, understand the situation, and give them an appropriate tax rate.
Let's discuss incomes. Let's maybe start off somewhere. We are also laymen to this tax. We've really not studied how tax works here, how people pay taxes, what benefits are due for citizens who pay taxes, and whether we have really enjoyed the advantages of paying taxes. Let's start off with income tax. The common man was disgruntled, professionals were disgruntled that a flat rate had to be paid regardless of your income levels. And maybe the wealthy were ignored. Those who evaded taxes were somewhat encouraged to evade taxes. That was the perception and allegation. Is this true, and what can we do to overcome this?
Okay, let me correct you. It's not basically that we have a flat tax structure for the individuals. We earlier said before 2019 we had a progressive, or right from the beginning, we had a progressive tax structure for when it comes to taxing the individuals.
Right.
So that's the right thing. So that is what is good. That is the concept of getting the, how do I say, broad shoulders to bear more burden. In other words, basically, you tax a person according to your ability to pay. So that's what you find in this concept of the progressive individual taxation. So what happened in Sri Lanka was, at one point, that progressiveness was diluted, reduced. How did that happen? At one point, our threshold, income tax threshold for a month was 250,000. So that was basically brought down to 100,000. So that ensured a category of low income earning category coming to the tax net. And then we also found that, okay, the way the slabs were thinned and the way the tax rate, the rates changed from basically thinning as a result of the thinning of the slabs, at 3,800,000 kind of a point, the highest tax rate of 36% came. So now what we see is the progressiveness that was there earlier is now getting little bit, how do I say, is becoming more like a flat structure. So that's why common people say that nowadays we have a flat individual tax rate. It's not the individual taxes, flat individual tax system that we have. The progressiveness that we used to have has been diluted. That is what we have.
So this thinning, and what do you suggest also to add to that?
Correct. So my understanding is now the current government is looking at that 100,000 minimum threshold to be increased to 200,000, so that the category that is between 100,000 and 200,000 will be out of the tax net. They will not have to pay the taxes. I'm sure most of the low income earning category will welcome that. And also, I'm not exactly sure whether they are looking at ensuring the middle class category also to be given relief. Prior to the elections, we saw a couple of models that were proposed, whether that will also be looked at, and then probably to increase the the top tax rate, which is 36, to maybe a higher rate. I don't know whether these are things that will come. We have to keep our fingers crossed. So that is how you basically bring the progressiveness into the individual tax system.
What would be the ideal situation to manage the middle income earners also, so that they're not disgruntled with the tax?
Yeah, so basically what should happen is the slabs, the lower slabs should be fattened. In other words, then what happens is the people who get say salaries up to maybe 500,000, 600,000 will have to pay less tax compared to what we are paying now. But at the same time, the high income earners may have to fill that gap, or basically come up with an alternative proposal, alternative tax proposals to generate revenue to cover up this loss of revenue. Now, what is important here is this. Now, what the mistake that happened in the 2019 is taxes were reduced without looking at how to fill the loss of revenue. So now here, if you are trying to give relief, okay, that's a noble thing, but keep in mind, when you don't close that gap, when you don't get alternative sources to collect taxes to cover that, that is going to affect the economy. That is not going to be very healthy for the, how do I say, our vulnerable economy. So that is an art. So that's why I said taxation is an art. It could be done, but one has to put more effort to design the tax system.
And one has to be creative, I believe, if you are to approach this in a more artistic sense. But income taxes, we were talking again individuals before we move on to other areas as well. Earlier, we remember there has been exemptions, or there has been a rebate for those who had loans to pay, if you can give us the more terminology in such way. But in layman's term, if you had a loan, you had a rebate. But now the discussion is whether imputed rental tax will be abolished or not. What does this mean? Will it be abolished or will it not?
Okay, my understanding, the current government is not in favor of this tax called the imputed rental income tax. I don't think they're going forward with that, so it will get abolished. The proposal will be getting abolished is what I believe. But let me speak a little bit about this concept of imputed rental income tax, right? So it is very unfortunate that the Sri Lankan economy has come to a state where we are compelled to tax imaginary income of normal people. A category basically, how do I say, created a mess of the Sri Lankan economy, and then innocent people are called upon to pay taxes on their actual income? No, on their imaginary income. So how that imputed rental income tax has been designed is, I think they have borrowed this from a couple of European countries like Switzerland, Netherlands. So they have this concept. You imagine you own a house, owner-occupied house. You imagine basically doing the calculation, if this house is given on rent, this is the income that I will get on that, and on that value a tax to be paid. That is why
pay a tax on that imagined.
Yeah,
okay.
Exactly. That is called the imputed rental income tax. And also, according to that proposal, if the house is on how to say, if the house is there's nobody's occupying the house, then on that also the same tax to come. So that's the base that was introduced by the IMF. So it's unfair because for two things it's not appropriate for the Sri Lankan system. Why? Let me explain this. Say in Switzerland and Netherlands, etc., why they introduced this system is to create parity between the renters and the house owners. In case of Switzerland, Netherlands, etc., if you own a house, you get two tax deductions. You are entitled to get the tax deduction for maintenance cost. Sri Lanka, we don't have that rule. In Switzerland, for housing loan interest, there is a tax deduction. Once upon a time, we had that housing loan tax, interest on housing loan tax deduction. It is no more in our tax system now. So now here, Switzerland introduced to create that parity. So because the person who is renting is not getting that tax deduction, whereas the person who is owning is getting that tax deduction. So therefore, to create parity between the renter and the owner of the house, income is imputed on the owner of the house.
Right.
So create a level playing field between the two parties. But Sri Lanka, that tax framework is not there. So there is no rationale to introduce that tax in Sri Lanka.
And I think if income parity is also is not such in Sri Lanka, where you create such a level playing field really as in Switzerland. But if we bring in this new tax policies as the NPP government suggests, will there be rebates or reductions, as you talk about, in different systems for the individuals, whether it's lower income, middle income, in such way?
Yeah, it's too early for me to predict because still we have not seen exactly what the new policy is going to be. My understanding it is being formulated, but at a higher level, the indication is that threshold, income tax liable threshold of 100,000 is to be increased to 200,000, and this other proposal of the imputed rental income tax proposed by the IMF is being not pursued. But at the same time, there will be new taxes or maybe increase of other existing taxes that may happen, that should happen in order to close the revenue gap or the loss of revenue because of withdrawing these two taxes.
Right. We've been talking about property tax and wealth tax. Does this mean going forward there will be a massive tax that's imposed, or what's the best way to approach this situation?
Right, it's too early for me to predict again the future what the government will do, but I think those taxes that you mentioned were basically suggested by the IMF in their reports. So they gave, in fact, when the I think March last year, when they came up with the roadmap for tax framework in Sri Lanka, they suggested Sri Lanka should adopt wealth tax, property tax, and inheritance tax. And I think there was a reference to gift tax also. So those are only suggestions. So first the government has to accept and then pursue or basically legislate. That means introduce new laws in relation to those. Whether those will be selected or not, we have to keep our fingers crossed.
A major question in society currently is the tax evaders. Will they be targeted? Those who earn massive amounts of wealth, but they're hidden from the system. Whether that will be targeted. Is there a way that could be targeted?
Yes, yes. Now basically in Sri Lanka, I think the tax collection mechanism is being how the technology is being used and different methods are being used. One significant thing is from the 1st of July, Sri Lanka has gone to this system called automated bulk information collection. If I tell in a simple language, earlier, if the Inland Revenue Department wants to collect information with regard to a particular taxpayer, naming that particular taxpayer, okay, send a request to the particular bank or to the banks, send me details with regard to this person, say Mr. X's financial details, bank accounts, interest, etc. Right? Now we have moved from that concept where the banks and a couple of other government institutions have to submit information with regard to all, not just the particular individual, automatically, periodically, bulk information. So as a result of that, Inland Revenue Department will be having information with regard to a person's, let's say, all the bank accounts, all the interest, vehicles, etc., share portfolio, etc. All that information with regard to a particular individual, without the individual declaring them to the Inland Revenue Department, still they will be in possession. So because of that, the tax evasion is going to become a hard thing going forward.
So that means we have made much progress in that sense.
We are keeping our fingers crossed as to how this thing being progressing, how this is being implemented. But my gut feeling is everything will not be 100% correct. But at the same time, if we get 70% correct, there will be a big change with regard to the tax collection in Sri Lanka.
When we talk about collection, also much revenues that were due to the government have not been received in recent times. Just a few weeks ago too, after the new government came in, we saw warrants issued on those who evaded taxes and millions that were due to the government being called. Going forward, will this be the same for industries such as casinos and other industries that people, the common man, perceive have been given an undue advantage over the other?
Okay, let me put it this way. When we analyze, over the years, things have changed even at the inland revenue level.
Right.
Why is that? I think most of us have seen in the papers where the government, the parliament, the COP, etc. have pointed out there's about 900 billion taxes roughly not collected, that is collectible, not collected by the Inland Revenue Department. So because of that, there's immense pressure on the Commissioner General and the Inland Revenue officers with regard to collection of the taxes. So they use many techniques nowadays to collect the taxes. So maybe if certain industry areas have been, ignored or overlooked basically, now we find due to the revenue potential that is there in this industry, these industries for tax collection, Inland Revenue officers also getting very active in these areas.
So which means we can take back whatever that has not been paid to the government?
It depends according to each case, basically you have to analyze, but what I see is basically the Inland Revenue Department officers are becoming more active when it comes to tax collection. So there are two things here. One is it's good, that will increase the tax collection of the government. On the other hand, we also have to be mindful when there is immense pressure on the IRD officers, they also sometimes tend to go out of the tracks. In other words, use methodologies that
such as?
I'll give an example, move out of the rule of law.
Right.
For instance, not, let's say basically there's tax refunds to be paid and the refunds not being paid or making delays, and where appeals have been made, the appeals not being heard, but trying to collect the taxes on the basis of the assessments that have been raised, whereas there's a grievance on the taxpayer, and that grievance is there in the petition of appeal that they have filed, whereas without giving a hearing to the taxpayer, without hearing the petition of appeal, trying to collect the taxes, in my view, is not correct. It's basically you are going out.
Pay heed to the law enforcement process as well.
So rule of law should be adhered to, notwithstanding how much pressure is there on the revenue officers.
You're an attorney at law as well, so you can give us the legal background here. But before we go there, I'd like to ask you in terms of income taxes, we've seen in recent times that solar panel, the tax exemption. If you can explain this to us very quickly before we go in for a short break.
Yeah, this is basically if you have expended or taken a bank loan with regard to installing solar panels, that expenditure is tax deductible. In other words, there's a qualifying payment deduction that is being given for up to 6 lakhs. For every year you can deduct 6 lakhs. For instance, I have spent 2 million to install solar panels. That 2 million I can recover up to 6 lakhs per year until I recoup the entire 2 million.
The entire 2 million that you've paid
to acquire the solar panels.
Solar panel, okay. We'll take a short break here at Hyde Park. We'll return with Hyde Park once again as we discuss Sri Lanka's tax policy, what individual and corporate taxes, businesses, how industries are taxed going forward when we come back after this break. Do stay with us. Welcome back. We're in conversation with Mr. Suresh Perera, tax expert, attorney at law, who will be discussing Sri Lanka's taxes and how best we move forward. We've been discussing individual taxes as well, but if we go into industries, for a long time, in recent times, we've been discussing how tax exemptions were granted to certain industries, whether it's health, whether it's certain industries, even foreign direct investments. And a major discussion has been the Port City project. There is concern that this is a tax-free zone. Is that the case?
Yeah, the simple answer is whether it's a tax-free zone. Yes, it's a tax-free zone because according to the way the Act has been designed, the Port City Commission has the power to grant tax concessions from named tax statutes in the Port City Act. So this includes income tax, this includes VAT, this includes so many other taxes. So the Port City Commission has the power to grant sweeping tax concessions to the enterprises that will qualify according to the Port City's, the Commission's view. So the technical term is business of strategic importance. If they perceive something as a business, BSI, business of strategic importance, then they can recommend sweeping tax concessions. Yes, you are correct.
So these taxes that are exempt and the monies that will be lost from government coffers, what is the benefit really for these strategic businesses coming in? Is this how other countries attract investors, industries to come into countries, invest, benefit and move out?
Okay, this is a major topic. Whether to attract FDI, foreign direct investment, do you have to have tax holidays?
Right.
Whether you have to give tax concessions, right? So most of the countries use that technique also. So, but at the same time, the analysts point out now, basically giving these tax concessions, the countries get into a race, and it's a race to the bottom. In order to compete with each other, they give tax, how do you say, tax concessions, and at the end of the day, those countries don't benefit also. They don't get anything at the end of the day, right? So now the view is that it is not the tax holidays, tax concessions that attract the FDI. It's the climate, the infrastructure, the political stability. Those are the factors.
Policy consistency.
Policy consistency, the governance. You know, those are the things that actually the foreign investors look at when they are selecting a destination to put their investment. Another technique, I think used very successfully by a country like, say, Indonesia, you don't give zero tax. You don't give zero tax. What you do is you look at the tax rates in the region, and then you try to pitch your tax rate, your country's tax rate, little bit below that. But you keep your other factors attractive. Stability, the infrastructure, etc. That basically attracts more investment than trying to do this zero tax policy. So at the same time now, there are international developments that are taking place. There are, how to say, policies, without being technical, basically giving sometimes basically giving a zero tax thing, one can see because of these developments as a donation of your tax revenue to another country.
While your people pay taxes when they earn. Sorry, Suresh, I know.
Correct, I know. So I hear that much.
Yeah.
So it's like this. When you actually analyze the Sri Lankan situation, we are in a financial crisis. Our tax to GDP ratio is very low. So the IMF is pointing out we have to increase the tax collection. These are facts. We have to collect taxes. So the question is, where are we going to collect the taxes from? Are we going to collect these taxes from these innocent people and trying to fill that tax gap, or are we going to be prudent and collect taxes from tax bases that are there? So when I say tax bases, let me see what I see is basically here everyone is looking at the individuals. More focus on the collection of taxes from the individuals. Not from the relevant potential tax bases. One example is global trend is to collect taxes from what are called non-resident digital digital service providers. That is all these people who I don't want to name anybody, right, who provide services from outside Sri Lanka via digitally, right? So there are big names in the, say, tourism industry, traveling industry, transport industry, etc. So many of them, films, etc. Now, that's basically because of the how do I say, the brick and mortar tax policies, tax rules that we have. Those service providers, digital service providers, do not get taxed.
Right.
In order to capture, in order to ensure that they pay their fair share of taxation to the country's tax framework, tax laws have to change. If you see, this trend is taking place everywhere in the world now. From recently, I think a few weeks back, we saw in the South America, Peru, and then Philippines from the other side. Most of the countries, India, etc., all of them are changing their tax framework to capture revenue from these non-resident digital service providers. But unfortunately, in Sri Lanka, up to date, we have not seen anything happen.
And try to ease the burden on the
exactly. This is what I'm trying to tell. Yes.
Those who earn 100,000 hard-earned income pay taxes, while these big companies that come into our country who thrive are given exemptions. So is from a legal perspective, is there a way to review these so you don't really discourage those who have already invested in Sri Lanka, but also create a fair situation?
Correct. So this is what I'm saying. Yes, definitely. Sri Lanka is a small country, small economy, and even the tax system is a small thing. Basically, you need to have the correct approach. That's why I said taxation is an art. Know the rules here and basically create the correct policy. So for that, more focus, more diligence should be coming from the top, from the policy makers. Create the proper, how to say, the framework for policy making, which is not happening in Sri Lanka.
Yes, we've managed to really go back on certain projects, managed to really anger some countries as well in the process. But tax, you say, is a much simpler but a creative form where you can approach it diligently. After the new tax measures agreed during the second review of the IMF imputed rental income tax, we discussed removal of exemption for service exports, then increase of CIT rate for specified sectors, replacement of SEL with VAT, VAT on supply digital services, you discussed this, lifting the import ban on motor vehicles and other imports, and continuing efforts to repeal SVAT by April 2025 and increase stamp duty on lease of land. With all this, there is also discussion on certain exemptions given to private healthcare, to education. But this government is also talking about food, health and education that will be exempt from taxes. Give us some information on what this means for individuals who pay taxes and for the government in terms of earning revenues.
Right. If I'm not mistaken, what you are referring to is the NPP government's election promise that education sector, the health, will be exempted from the VAT. So let me look at the education first. Actually, education has been exempted from VAT, or prior to that the GST, from 1998. Right. So the history is earlier this exemption was confined to educational establishment providing educational services. In 2011, there was a enhancement. In other words, any person, as opposed to an educational establishment, any person providing educational services to be exempted, the law underwent a change. So education as of now is exempt. But the problem is the educational establishment or the education supplier still has a barrier, because any equipment or any services that he purchased to provide the educational services, he has to pay VAT to the supplier. So that VAT component he cannot deduct. In other words, in technical terms, input VAT that he pays to his suppliers, he cannot get a deduction. So that compels him to increase the price of the product or the service that he is providing. In other words, school fees, educational fees goes up. Now government is keen to ensure the educational fees will be low. So that's why the government is saying that the education will be exempted, but it's not the education that needs an exemption, because it is already exempted. My suggestion is, let's convert the exemption to zero rated status in relation to education. Then what happens is, the difference between the exemption and the zero rated status is, in case of zero rated services or the products, they can claim input VAT. In other words, the VAT that they are paying to the suppliers, they can get a deduction. So that's a relief in relation to their cost base. Now, since they have that advantage, they are in a position to reduce the fees charged for this educational services. Now, the human behavior is such, nobody is going to pass that benefit to the consumers, let's say the students, unless there is a cane, unless there is a rule. Now, this is why I say that in countries like India, etc., there is a rule called anti-profiteering. Right. In other words, if the government is giving a VAT benefit to the traders, the service providers, that benefit must be passed on to your customer. In other words, if there is a benefit, VAT benefit given to the educational establishment or the suppliers of the education, by converting the status from exempt to zero rated, that benefit, that cost benefit, must be given to the students by reducing the school fees. So what the government should do in this scenario is, while changing the status of the education from exempt to zero rated, must also introduce the concept of anti-profiteering clause into our VAT Act with a proper mechanism to enforce that also. If you do that thing, then only the noble thought of the government of giving a benefit to the educational services will get passed on to the students, the consumers. Right. In 2019, at a huge cost to the government, I think almost about 500 billion cost to the government, the VAT reliefs were given to the suppliers. But those suppliers did not pass on most of those suppliers did not pass on that benefit to the consumers. So in the marketplace, we did not witness the prices of the goods and services coming down. That is because of the lacuna in our law. We don't have that anti-profiteering concept in our law. It has to be introduced. So
bringing this anti-profiteering law, you mean that will create a field where consumers are benefited through whatever?
Yes. Basically, in other words, whatever the intention of the policy makers to give benefit to the consumers by giving this VAT benefit, VAT reliefs to the suppliers, becomes, effective only if you have that anti-profiteering clause in the Act.
We've been talking about VAT reduction to increase. This government has shown us that, or discussed that VAT will be abolished in such a way or reduced to certain industries. What does this mean to government revenues? Earlier, VAT was introduced or increased, the threshold was increased, saying government revenues had to be improved to keep in line with IMF standards or requirements. Will this put pressure on the revenue collection mechanism?
Let me see. I think the government has mentioned with regard to VAT only the education, health and the food. I am not sure whether the government has said that they will bring down the VAT rate of 18%.
Right,
we haven't read anywhere. But yes, basically, whatever relief that you are giving, that means there will be a loss of revenue to the Inland Revenue Department, to the state. So this is why I said that when you are giving an exemption, first you have to do the cost benefit analysis in the tax policy unit, a report created, so that you know what is going to be the impact of this particular action. Not trial and error policies.
You spoke about a tax ombudsman, tax policy unit. I'd like to speak further on that. You mentioned that there will be accountability. This unit will advise government on how to tax, how to maybe create policy, and ombudsman too. What benefit will we have here?
Yeah, ombudsman is the person that will ensure that is in a position to address the grievances of the taxpayers with regard to the malpractices by the tax officers. This is not about technical. This is not about technical interpretation. For instance, if there is a refund due, that refund is being delayed. Or when you go to where you find basically the tax officers are going beyond the, rule of law and engaging activities that are not correct. So there has to be a forum for the taxpayers to sound their grievances. So Office of Tax Ombudsman is for that purpose. And it is very essential that this Office of Ombudsman should be created by an Act of Parliament and not like the one that we had in the past where the Office of Tax Ombudsman was created by a cabinet paper.
Let's very quickly also discuss about capital gains tax, withholding tax regime. There's a discussion about shift to withholding tax regime.
Yes, this is sorry.
Yes, go ahead. We don't have much time though.
Yeah, so basically, see, Sri Lanka is a third world country. In the third world countries, tax collection is a challenge. So what do we have in Sri Lanka? We have the system of what is called the self-assessment payment. In other words, I calculate my taxes, I declare my taxes and pay to the Inland Revenue Department. That is called the self-assessment payment system. The opposing one is the concept of withholding tax regime. That is where the person who is making a payment deduct a certain percentage of tax of the other person and remit to the Inland Revenue Department. That ensures better tax collection by the state. So what I'm advocating here in Sri Lanka is that we need to put more weight, shift more weight towards the withholding tax regime as opposed to the self-assessment regime.
What, if you can explain that really, we
Right,
don't
so-
understand how we can assess.
Right. So you look at basically the how in relation to salaries
Right.
that we get. We don't go and pay taxes to the Inland Revenue Department. When the company is paying the salary, from the salary, the tax amount, we call it the payee tax or we call it the APIT tax, is deducted. Employer, the company pays directly to the Inland Revenue
Right.
Department.
Yes.
So that is called that is the concept of withholding. The person who is paying the amount withhold the tax amount and remit to the Inland Revenue Department. So now Inland Revenue Department gets constant revenue of constant tax revenue, and also there is no way for the employee to avoid the tax. It is deducted and given. So now when it comes to say something like the capital gains tax, you can see at the Inland Revenue Department the collection of capital gains taxes are very low. Why? Because it is under the self-assessment regime. The person who is say selling that particular asset has to calculate the tax and file the return and make the payment. If he decides not to do that thing, then the Inland Revenue officers have to carry out investigation, come behind and take recovery action and collect. But on the other hand, if we come to a system where in relation to capital gains tax also we shift to the withholding tax regime, then the person who is buying will deduct the relevant amount of tax and send it direct to the Inland Revenue Department.
Where the person who buys is liable to pay tax of whatever or reduce and pay, just as the employer does.
It is the seller who should pay the tax,
but
the buyer who is paying to the seller will deduct that tax amount and remit to the Inland Revenue
just
Department.
as the employer does when paying the salaries of an employee.
Exactly.
Right. We have just a minute or two, Suresh. If you can take us through what best practices we can bring in. You discussed much during our discussion, but what elements of the tax system should be addressed here, and how our revenue numbers, we have targets set by the IMF, we have targets within the country as well. And again, I stress on the people who are waiting for a little bit of relief, while those who earn more or those who are liable to pay more taxes should be brought into the net.
Correct. So it's correct. It's basically nobody likes to pay taxes, but at the same time, this is how to say, thing that we can't avoid. Sri Lanka is in a very bad situation financially, so the taxes are required, and I can see basically during the next 10-15 years in Sri Lanka, taxation is going to be a major field, major source of collection of revenue to the Inland Revenue Department. So now policymakers, the governments have to be sensitive. In order to collect this revenue gap, where to collect, from whom to collect, as well as designing the policies, and when implementing, they have to be sensitive. So that's why I keep talking about policy redesigning with the tax policy unit. Tax ombudsman with regard to collection implementation of these rules. You have to follow the rule of law. If there is a grievance caused to a taxpayer should have a forum to go and discuss this thing. So we need institutional changes also in the taxation system in Sri Lanka. At the same time, I again repeat, this is a very small thing. Taxation is an art. This could be done.
And it just needs, is it just political will or will among the people?
I would say all. People should also realize basically tax is an important element in the Sri Lankan status now, that you have to pay taxes. I know it's nobody likes to pay taxes, but at the same time, okay, the tax administration also has to be sensitive with regard to the mechanics being used. At the same time, most importantly, I would say the designer of the tax policy must be sensitive also as to where you are going to collect that tax from.
Right. Thank you very much for sharing your thoughts here at Hyde Park and for giving us much clarity on these on terminology that we don't understand and where we are heading.
Thank you.
We had with us Suresh Perera, attorney at law, expert in tax and regulatory matters, who was selected the International Tax Review's Tax Practice Leader of the Year for 2024 for the Asia-Pacific region, talking about Sri Lanka's tax policy, where we should be moving forward from here and how individual and corporates can comply and pay taxes while Sri Lanka benefits from this. We'll talk about more, but during another episode of At HydePark here at Derana 24. We'll see you again next week at the same time. Until then, take care.